But let's bring in Eronmosele Aziba, who is one of the investment analysts at Afrinvest in the studios here to discuss some of this for us and how you should play the markets in this very particular season. We call it Politics in the Markets, Season 1.
Yeah, it has a nice ring to it.
Nice ring to it. Yeah, this is Season 1 because it's going to be Season 2. That's from August to December. Then you got Season 3. Which is the finale, Q1 2019. So let's have the Season 1 with you. This is the pre-election period and what have you. So if you look at the current state of the market since January, do you think investors got a hint, or were they thinking about what the political circuit will be, and the market has been a bit of a downward trajectory, even though we've had very decent earnings for full year and Q1?
Yes, for most of this first part of the year, we believe the sort of slowdown in pace of gains that we've seen in the market has been largely tied to some sort of correction in the market. I mean, considering the impressive performance that we had in 2017, which was sustained in January, what we've seen since January, February, March, and April is that a lot of the stocks that rallied significantly, we've seen a lot of investors start to take profit. And with regards to the earnings that have come out that have been largely positive, the major reason why we didn't necessarily see any significant impact on trading activities was the fact that this had already been priced into valuation in the market. So as a result of that, we didn't really see the positive impact that positive earnings would usually have in the market. But drilling down further into trading activities in the market, we've also noticed that since November last year, the dominance of the market in terms of looking at it between foreign participants and domestic participants has been largely skewed towards the domestic bit, which is against the trend that we've had historically, where we have a lot of foreign investors driving activities in the market. So we've seen a lot of domestic investors now take over in terms of trading activities in the market. We also attribute this to maybe the slowdown that we've had in the market as well.
What are investors saying right now? What are they telling you folks who are on the market street about their fears, their outlook, the risks, what they see every day, or they read on the pages of newspapers and heard on television and on radio about the coming elections?
Yes, so with all the positive news that is out there, I think the one thing that a lot of investors are still worried about is the stability in the polity. With the general elections coming up in 2019. Usually what you have in months leading up to that period, you have an exodus of funds from the market, as a lot of investors just want to stay back and see how developments are shaping up before coming back into the markets, because uncertainty is the one thing that investors do not want. But I mean, from looking at what's currently developing in the political space, you already have the various parties conducting their primaries, although we've had a couple of issues with some of the certain parties. So factors like this could potentially dampen investor sentiment, because the one thing, like I mentioned, the investors are looking at is stability. With any possible disruptions could definitely send a negative impact on what could possibly happen as the elections even draw closer, and this could also weigh on investor sentiment.
Investors know that we will have elections.
Definitely.
So it's not something out of the blue. They are aware of it. They know it's a recording. For every 4 years we go for this major turning point or major event on our calendar, or that season, as it were. So they know, they're aware. But what makes every period different? Is it because there's a change in administration, or folks are just generally wary about whether the current managers of the economy will take one eye off the ball while they go for political meetings and things like that, or the opposition is most likely to take over, whatever it is?
Yeah, so generally, stability in that space with regards to how activities are being carried out leading to the general elections like I mentioned, with some of the parties that have already had their primaries to sort of determine who would be running for the posts.
For the highest office, at
Yes,
least.
for the highest office. We've already had some disruptions to these activities. And as a result of that, investors could be wary, wondering what exactly is going on in that space. Are we going to have a bout of violence leading up to the elections, which is characteristic of most SSA or African countries leading up to their general elections? Or are we going to have a peaceful period? If it's going to be a transition to a new administration, how is it going to be? Are we going to have a peaceful period? Would the current ruling administration willingly accept defeat, or are we going to have a situation where we're just going to continue with this administration? And what are the possible things that they would be doing in their second term if they are to remain? So generally, these worries are what a lot of investors
have on their minds.
Yeah.
And in particular for us at a time now when we have local investors seem to be leading the markets from the front rather than from behind.
Yes, I mean, as opposed to the trend where you had in prior periods where foreign investors are the major participants in the market. So essentially what you have is some sort of bandwagon effect of the domestic investors just coming into the market, taking position where in stocks that a lot of foreign investors are usually attracted to, especially in the banking space, in the consumer goods space as well. Now that we have a lot of domestic investors playing in the market, what we've actually noticed now is, as opposed to periods where investors are just on some happy-go-lucky trading spree of just buying generally
go happy,
just
you
buying
don't have
generally
that. Not
across
now.
the market. Now everyone's actually looking at fundamentals of these companies to see how their performance has been. Is it sustainable going forward? And if it is, how impressive can their results be? Is this an investment where I want to put my funds? What's the potential for capital appreciation? Also, knowing that a lot of Nigerian investors are generally interested in stocks that are going to pay dividend, what's the potential for dividend payment going back? So now we have a more trading activities that are backed by sound fundamental analysis.
Oh, we'll get to that in a second, but we just want to take a look at this pre-election and post-election all-share index returns, which is just one pager that you sent to us about how the Nigerian market, if you took a sample of the last 4 elections we've had, 2013, 2003, 2007, 2011, and 2015, and trying to track the few months pre and just immediately after the elections when the new president or new administration take office, or just a return as we had in 2003, 2007 for the Obasanjo's administration, 2011 with the Jonathan's administration, and the 2015 with the current Buhari's administration. If you look at this a table and what it shows us, that how do the markets behave? How do investors track that? Walk us through this that we have right now on our screen.
Yeah, so what we have here is the 3 months leading to the elections, because we usually have the elections in April, although for the last one it was in March, and then 3 months after the elections. What we've noticed is for the first 3 months, in periods where you have gains, you start to see those gains, the pace of gains decline as you move closer to the elections. You can see that in 2005. In 2003 and 2005, in 2011 as well, the pace of gains starts to decline, and then shortly after,
just before the election.
Just before the election, and then once the elections are over, then you have some sort of rally in market performance. We believe the outlier will most likely be 2015. After the elections, yes, we had the Buhari rally. It was termed the Buhari rally.
If you look at the map, you're talking to the last line there, which is 2015, and we're looking at the month of March and April. Right.
We had a significant gain in the market because, leading up to the 2015 election, there was a lot of optimism with this
administration,
with this incoming administration. If you even look at approval ratings going by the NOI polls, approval ratings were about 70, thereabout then.
Can you remember the last president of Nigeria who had that approval rating?
It was about 70. Now it's fallen significantly to between 45 to 50, thereabout. So there was a lot. It was greeted with a lot of
So the stock
optimism.
market, the equities market was very happy with Buhari just as he won the election.
Just as he won the election.
Yes,
but
that's 5.5% on the index return.
Yes,
then
and
as
then
soon as
April as well.
Yes, just before he took office, the market went up almost 10%.
Yes,
in April, but he started losing it.
When we started to see delays in things, for instance, appointment of ministers and delays in some other aspects. One of the key things that led to the APC gained popularity on was the fight against corruption, and everyone was expectant as soon as they just come in, hit the ground running, and then start to tackle some of these deep-seated issues.
Well, they're looking for folks in handcuffs.
Well, essentially,
put it right on the table.
You know,
there's no need. Just remove the gloves. Folks were looking for a lot of handcuffs on the table.
Well, yes, for us to start seeing convictions, start to see that steps are actually being taken. But with the delays that were experienced, we started to see the market decline again, and then coupled with the fact that we also had weaker macroeconomic indicators. You had, especially tied to the FX issues that we're having, we still had the FX illiquidity, as well as all prices that still remain.
All of this was before we pulled the RE window together, and the central bank actually came up with a new FX system. So a bit of a conundrum here for the administration there. But again, we're now looking at another electoral cycle and what will likely happen. What do you think? Do you think the macroeconomic environment, including the FX, monetary, right now is a little bit good enough that if we're plotting the 2019 index return in the next couple of months or thereabout, we'll see something that is different for the current administration from what we have right now here?
Well, definitely. I mean, comparing the current state of the macroeconomy with what we had in prior year, all signs lead to positives. We have GDP improving, you have FX stability improving, external reserves rallying, all prices improving, especially with the recent the pulling out of the US from deal. So outlook on all prices still remains high. So
are you part of the self-interest?
Well, I mean, there's a saying that goes, it's not out of the benevolence of the baker that you have bread on your table. It's all about self-interest, essentially. So looking at macroeconomic indicators, they all point towards positive outlook for the economy, and this should also translate into improved market performance. But we still point out that the one downside that could potentially crystallize is tied to how activities leading up to the elections are carried out. But barring any major disturbances or any cases of violence or anything like that, we should have a largely positive performance.
Politics and Markets, Season 1.
Thank you.
With Eronmosele Aziba, one of the investment analysts at Afrinvest. We'll take a break. We're right back. You're watching Business Morning.